People in China are going head-to-head over something you'd never expect. We're diving into the fascinating world of Chinese luxury goods and how they're causing a frenzy. We'll uncover why well-off Chinese citizens are battling it out for unwanted Rolex watches and how this unexpected craze is shaping the market in 2024. Stick around till the end to understand the surprising reasons behind this Rolex showdown. To prepare for an upcoming economic downturn, many well-off Chinese people are selling their fancy items like Rolex watches and Hermes bags at much lower prices. Meanwhile, the Chinese love for luxury things remains strong. So, because of this situation, people can buy these fancy items like used Rolexes for less money, but it's like a cycle. Buy today, sell tomorrow. We know all about how the Chinese are quickly buying up all the unwanted Rolexes that are flooding the market at good prices. While the rest of the world is trying to adjust to life after the pandemic, things have been a bit rough in China. The rich Chinese people have been selling their used Rolex watches to get cash quickly. This has made the prices of used luxury items go down significantly in the past few months, and it's causing problems for the luxury goods market. Since Shanghai, which is China's big financial and commercial center, put strict rules in place in March 2020 to stop a COVID outbreak, the value of many popular brands of fancy watches and bags in the secondhand market has dropped by 20 to 50%. These rules in Shanghai and other places have hit small business owners hard. Many of them collected lots of fancy things when times were good, but now they have less money because of the lockdowns. Also, because of the efforts to control the disease, many tourists who were in Hainan since August haven't been able to leave the island. Even though President Xi Jinping has a strict COVID policy, the Chinese government is promoting Hainan as a place where you can shop without paying duty fees. In Hainan, Chinese shoppers can now buy the same fancy stuff they used to find in cities like Paris, Rome, and London. That's pretty cool, right? But wait, here's the kicker. Since March, the price of used Rolex Submariners has dropped a whopping 46%. Imagine that, nearly half off. This drop in value was reported by Watchco, a place where people buy and sell fancy watches. Now, this specific Rolex model is a real gem for watch enthusiasts and collectors. Not just watches, even classic items like the Hermes Birkin bag have seen their prices go down by as much as 20% at luxury bag shops in Shanghai and Hangzhou. But here's something interesting. Pawn shops and other places that sell fancy things have been doing well. Why? Well, it turns out that many business owners who needed money have been selling their luxury items. They either want to pay off debts or expand their businesses. And yes, pawn shops sell expensive stuff too. Now, let me tell you about James Wang. He's a guy who sells second-hand luxury watches in Nanjing. At the start of the year, he bought 0 Patek Philippe watches and 5 Rolex Submariners from people who needed cash. But guess what happened in July? He bought 6 Patek Philippe's and a whopping 29 Rolex Submariners from folks who were in a tight spot. James says that Patek Philippe watches are meant to be passed down through generations, but in difficult times, people part with them. Before Shanghai had its lockdown, the value of used Rolex Submariners went up by a crazy 240% in just 6 months. Dealerships in Shanghai and Hangzhou, who had raised their prices earlier in the year, are now dropping their prices because of the changing market. It seems like the good times might be over, and we can't blame business owners for being cautious because the economic correction that's coming might stick around for a while. An investor in watches, who also runs a business selling electric heaters in the city of Wuxi in eastern China, had something interesting to say. He pointed out that the recent price increases in the luxury goods market were mainly because people were guessing and speculating, not because they were based on solid reasons. And he's got a point. Such price hikes can't last for a long time because they're not built on a strong foundation. Now, this shift in the market is a big deal for China's luxury goods industry, which is worth a whopping $74 billion. But here's the thing. When it comes to the second-hand luxury goods market, China has been trailing behind countries like the United States and Japan. Zhu Tainiki, who's based in Shanghai and created a marketplace for second-hand luxury goods, is making the most of the economic slowdown caused by the coronavirus. He's on the lookout for new places to open up his business. Why? Well, more and more people are trying to sell luxury items like Hermes Birkin bags and Rolex watches just to make ends meet. Zhu, who used to work as a venture capitalist, has noticed this trend. People are realizing that they can sell their fancy stuff to get some much-needed money. Zhu said, to make ends meet, which means to cover your basic expenses, more and more individuals are now aware that they may sell expensive products for some money. So, the number of people selling things through Ju's platform has gone up by a whopping 40% this year, compared to the same time last year. The site now has 12 million users, and they're expected to trade around 5 million high-end items just this year. This change is a big sign of how things are shifting in China's luxury goods industry. It shows that the second-hand luxury market is becoming more important, even though it used to be smaller than in other countries. The changing landscape of the luxury goods market in China could have significant implications for the world's largest luxury goods producers. These big players have been heavily focusing on the Chinese market, but now they're facing slower sales there. The growing interest in second-hand luxury goods in China is making some brands rethink their strategies. They are starting to consider how they can participate in this resale market and what role they should play in the whole process. Here's the exciting part. A market research firm predicted at the end of last year that China's second-hand luxury goods industry could grow to a staggering $30 billion by 2025. That's a huge jump from the estimated $8 billion in 2020. While there are no new projections for 2024, it's clear that this market is on the rise, and it's catching the attention of many. Ze, for example, has big plans for expansion. This company, which started as a digital marketplace in 2016, is now opening physical stores in places like Shanghai and Chengdu. They're also looking for more retail space in Beijing, Guangzhou, and Shenzhen. Other popular alternatives like Feiyu, Ponhu, and Plum are also gaining ground. They are improving their authentication procedures, reaching more consumers, and sometimes even transitioning from online-only to both online and offline models. These companies attracted tens of millions of dollars in venture capital funding in 2020 and 2021. Analysts believe that domestic firms will continue to dominate China's luxury resale industry for the foreseeable future. Global retailers like Vestiaire Collective and The Real have not entered the mainland China market yet, and they've said they don't plan to do so anytime soon. Predicting clashes among Chinese shoppers over unwanted Rolex watches could potentially stem from a convergence of factors. In the realm of luxury goods, particularly in regions like China, where the demand for prestigious items like Rolex watches is high, clashes might arise due to changing trends, limited supply, and evolving consumer behavior. Should there be a shift in economic conditions or changes in the perception of certain Rolex models, scenarios where shoppers clash over returning or exchanging watches they deem less desirable could occur. In a competitive market, with passionate collectors and limited availability, disputes might arise when shoppers compete for highly sought-after models, leading to clashes or disagreements, especially if returns or exchanges are challenging due to stringent policies or scarcity of preferred models. However, specific incidents like these are speculative and depend on various dynamic and unpredictable market factors, making precise predictions difficult. That concludes our video for today. Feel free to share your thoughts about this video in the comments below. And for more videos like this, like and subscribe to Luxury Focus. Thanks for watching and see you next time.